Okay, in the last video, um, I was able to close with profit my first scalp trade. Okay, and like I said, I have a buy limit and a sell limit. Okay, both at the 8,000 level. So my buy limit is at 948,000 level, and my sell limit is at 958,000 level. Okay, and I mentioned that I have an ascending trend line. Now the break of the ascending trend line was what necessitated, or the close, the proximity, or the candle formation around the ascending trend line was what made me to sell. Okay, to place the first sell trade, and I took profit for 1,700 points. Okay, now I placed my buy limit and I expect price to touch the buy limit. The buy limit, as you can see, is 948,000. The sell limit is at 958,000. So buy limit is when you place buy limit when you want price to drop and then trigger a buy trade, so that you expect price to drop to a level, trigger your trade, and then start to go up, so that you'll be in profit when buying. Sell limits, on the other hand, is you place your price above, you place your trade, your order above price. Okay, you expect price to go up, trigger your order, your sell order, sell limit, then price, you expect price to come down, so that you be in profit. Okay, so what I just did now is to set my take profit for my buy limit to 3,000 points. I also set take profit for my sell limit to 3,000 points. So I can right now price around 951 300 area, and as you can see, we have a rejection, we have a pin bar saying price may go up. That week is telling me that price may go up, and price get to the middle of the 948,000 and 958,000 spacing, I'll place a buy trade. So anytime price gets to the midpoint of my 948,000 and 958,000, I'll place some trade. If it's dropping from my sell limit towards the midpoint, I'll sell. If it's going up from my buy limit towards the midpoint, I'll buy. So I just placed the buy trade just now. Okay, 0.001 lot size. Okay, so I just placed a buy trade. I sense that price is going up, leaving it not going to trigger my buy limit, as you can see, due to the weak formation. Okay, the weak formation gave me a signal that price will go up, and that's what I just did. I just placed a buy trade 952 746.92 level. Okay, so I'm going to set take profit of 2,500 points. Okay, for my buy trade. Now comes to 955,246. 955,246.92. So that's my take profit for the running buy trade. Okay, because of the rejection. Okay, formation of a week telling me price will go up. Price is not getting to the 948,000 level. So what I also did is to place a stop loss for my buy trade. Now the stop loss is supposed to cover a particular number of pips, around 8,000, 9,000 pips. Okay, that's my stop loss for the running buy trade. Now the stop loss is supposed to cover my spacing, which is 4,000 spacing for my zone recovery. I'm going to place a hedge trade of 0.003 with 4,000 spacing. So I'm removing 4,000 points from the point of my running buy trade. So I'm going to place a sell stop of 3 times the lot size, which is 0.003 at 4,000 points below my running buy trade, around 4,000 points below my running buy trade. Then I'll place take profit for the edge trade to be 2,500 points. Then the stop loss to be around 8,000 points or 9,000, between 8,000 and 9,000 points, so that it will also cover or protect my trade, my running buy trade. Okay, so the take profit of this sell stop will be 2,500 points, while the stop loss will be around 80 points above the take profit of my running buy trade. Don't forget, my running buy trade is 0.001 and its take profit is 2,500 points. So my take profit for my sell hedge trade will be around 80 points above that 2,500 point of take profit of my running buy trade. Now the stop loss for the running buy trade will also be around 80 points below the take profit point of my sell stop edge trade. So that's the way the arrangement for the hedge for the scalp trade is. So I currently have a running buy trade. The reason why I placed buy trade is because price didn't get to my buy limit and it approaches the midpoint between the buy limit and the sell limit. Okay, so and I placed I imputed the take profit to be 2,500 points for the running buy trade. I also measured 4,000 points below the buy trade to have my hedge trade, which is a sell stop. And the sell stop lot size is multiplied by is 3 times the lot size of my running buy trade, which is 0.003. Okay, now for my sell stop order, I placed I imputed take profit to be like 2,500 points, and then the stop loss I placed a stop loss for this hedge trade to be around 80 points above the take profit for my buy trade. Okay, in contrast to that, the stop loss for my running buy trade, I placed it around 80 points below the take profit of my sell stop order. Okay, now the price is going towards the take profit of my buy trade. Okay, I expect to make 2,500 points from this running trade. But if price decides to go down towards my buy limit, then it will trigger my sell stop. And remember, I said I don't want to have more than one running trade with its edge trade. So what I will do is, if price triggers my sell stop order before getting to my buy limit, I'm going to delete the buy limit so that price does not trigger the sell stop, which is my hedge trade. And I also have a running 0.001 buy trade, and also now trigger the buy limit to now negate the essence of this strategy. So what I just said is, if price starts to go down, we does not get to my take profit for the running buy trade, and it gets towards my sell stop order, I will quickly delete the buy limit below the sell stop order, so that I don't have two pending orders triggered at the same time. But if price gets to my take profit for this running buy trade and triggers the take profit and is closed in profit, I will delete the sell stop order, and that will leave me with the buy limit and the sell limit. I will continue to monitor if price will continue to go up towards my sell limit. But if price gets towards my sell limit and start to come down towards the midpoint between the buy limit and the sell limit, I'll quickly initiate another sell trade. So that's the way it works. That's the way the strategy works. Currently, price is back above the trend line. The trend line, the ascending trend line that I plotted earlier, price is back above the ascending trend line. And I expect to make a profit of 2,500 points. That's like $2.5 on a 0.001 buy trade. Remember, for every trade placed, your take profit point for this strategy take profit point should be 2,500 for every trade placed. But the initial first trade that I placed, which was a sell trade, if I'm going to measure 2,500 points, it will get to my buy limit. So that's why I made it initially 1,000 points, then I extended it to 1,700 points, so that by the time the trade is closed and price get down to my buy limit, I won't be having two running trades at the same time. I can only provide edge trade for one trade at a time. To be confusing if I have two trades running at the same time. Rushing to provide edge trade for both trade might bring up some mistakes. Okay, this kind of strategy, you have to babysit the trades and ensure all your trades are closed, and then you delete the pending orders before you take your eyes off the screen. And price has a way of fluctuating. Price has a way of ranging. As it is right now, I expect price to go up to trigger my take profit, which is about 2,500 points. But you can see price showing some level of indecision, just moving up and down on a particular spot. Okay, you can see price jumping a bit and heading towards my take profit. So if price triggers my take profit, what I will do next is to first of all delete the running sell stop order. Okay, price is about to get to my take profit. I'll continue to monitor if it will trigger my take profit. So for the sell limit, the sell limit is above. You place sell limit above price. You expect price to touch your sell limit and go down. Okay, price is about to trigger the take profit, the running buy trade take profit. Let's see. It's about to trigger the running buy trade take profit. Let's see if price triggers. It's already 2,400 points, which is $2.4. If it triggers it, then I will have 2,500 points, which is okay. It's closed the trade. I'm deleting the sell stop order immediately. That has been deleted. So I'm back to my sell limit and my buy limit, and price approaches my sell limit. So you place sell limit above price, expecting price to trigger your sell limit order, and then price should fall to an extent. You do the same thing for buy limit. You place buy limit below price, expecting price to fall towards your buy limit order, trigger it, and then rise. Okay, at a point of resistance, you place your sell limit, and at point of support, you place your buy limit. What I'm just doing right now here is I'm trying to plot another trend line, expecting price to continue in that direction, in that manner. But if price should fall below the trend line that I just plotted, I expect what I will do is to sell. Remember, my sell limit is above, my buy limit is below. So if price should break down and close below the trend line that I just plotted, I will initiate a sell trade. What I'm doing now is to try to mark the midpoint area that can guide my decision when it comes to placing a sell trade. So but for now, price is going up towards my sell limit. Remember, my sell limit is around 958,000 level, and my buy limit is around 948,000 level. But what price is doing now is price is rising towards my sell limit. When price gets to a sell limit, it triggers the pending order, and then the sell limit turns to a sell order, and you expect price to fall so that you be in profit. Likewise, when price gets to a buy limit, price slides down towards a buy limit, it triggers the buy limit, and the buy limit instantly turns to a buy trade or a buy order, and you expect price to go up. Don't forget, you place sell limits at areas of resistance, and you place buy limit at areas of support. For this strategy, I normally place sell limits above price at the 8,000 level. So above price at 8,000, my 8,000 level is at 958,000 for this particular screen. Okay, and the support area for my 8,000 level is at 948,000 for this particular part of the chart or screen for this exercise. Now, price is currently forming a week, so we are having like a bearish week. So price may fall at this point. Price may fall at this point. We are already having a bearish week. If price falls below my trend line, I will enter a sell trade. I've already placed a horizontal line at 95261.43 to guide me as regards the midpoint between my sell limits and my buy limit. So if price gets to that red line, I may sell. If it gets below the red line, I may sell. Okay. But if price continues to go up, I will wait and allow price to touch my sell limit, then look for a possibility of price coming towards my take profit, which is 3,000 points. But immediately it triggers my sell limit, I will do one more thing, which is to quickly place my hedge trade above the sell limit. Don't forget, when price triggers the sell limit turns to a sell order. So I'll have a buy stop order above the sell limit. And the buy stop order will be 4,000 points above the sell limit. I'll also do one more thing. I will monitor what happens to the running sell trade. If the running sell trade if it triggers my take profit, which is 3,000, fine, all fine and good. But if it goes up above the 958,000 level and triggers the buy stop above, the first thing I will do is to ensure that I correct or edit the take profit of my sell order. For currently the sell limit has 3,000 points, so I'm going to change the take profit to 2,500 points, knowing fully well that I've already placed the take profit of my buy stop, which is the hedge trade. I've already edited the take profit to be 2,500 points. But if the buy stop above this current sell limit, if it gets triggered, as soon as after the sell limit is triggered and it's turned to a sell order, if the buy stop gets triggered, I will quickly edit the take profit of my sell limit, which is now which is supposedly to be sell order. I'll change it from 3,000 to 2,500 points. Currently, price is still above or moving around the ascending trend line. If price closes or forms a bearish formation, if price forms a bearish candle below I'm talking about the current candle, if it turns and becomes a bearish candle, if it closes as a bearish candle, I will place a sell trade. But for now, price is approaching my sell limit order, so I'll monitor. If it triggers the sell limit, I'll allow it to go towards my take profit, which is below the sell limit. Of course, if it triggers the sell limit instantly turns to a sell order. If price falls and triggers my buy limit, the buy limit instantly turns to a buy order. Okay. And this exercise, you can see the placement of sell limit, placement of buy limit, placement of buy stop, and the placement of sell stop. Okay. If you have a running buy trade, right now I do not have any running trade, but if I have a running buy trade, I'll place a hedge trade in the form of a sell stop, 4,000 points below it. Okay, so when my sell stop is triggered, it also becomes a sell order. So I have two opposing trades. I have a buy running buy trade and a running sell trade. That is for a sell stop. For a buy stop, if I have a running sell trade or a running sell order, I'll place a buy stop above that order, 4,000 points above that running sell trade. Okay, when price goes up against my sell trade, I place sell trade expecting price to go down. But if price goes up against my sell trade, it will trigger my buy stop order. My buy stop order will instantly turns to a buy order. So I have two running trades. I have a sell trade and I have a buy trade. But for this hedge strategy, the benefit is if if you place a trade and the trade is running and suddenly price starts to go against your trade, you can quickly place a hedge trade. Now the number of lots for the hedge trade is going to be 3 times your running trade, and then the take profit for your hedge trade will be 2,500 points, so that it does not, before it gets to the 4,000 points, being a higher lot size, it quickly closes. It makes you get to break even in the sense that you recover all your drawdown, and then you come to break even. There won't be loss, there won't be profit, then you can close your trades. So that's the basic reason for this strategy, for you to quickly break even in case price suddenly goes against your trade, which happens more often on volatility 75 index. Can use this strategy for trading gold. You can use it to trade Nasdaq 100. These are highly volatile commodity and an index. Okay, you can use it to trade fast moving assets like GBP, JPY. Okay, you can use it to trade it. If there's any instrument that is very fast, that has fast movement, you can use this strategy to trade it. For volatility 75 index, I take my support to be at the 8,000 level. Right now, price is at 955, 400. So my support will be at 948,000. Okay, and my resistance will be at 958,000. For my support, I'll place buy limit. At my resistance, I'll place sell limit. Right now, price is forming a bearish candle below the ascending trend line that I drew some minutes ago. So if price drops towards my red midpoint line, I'll place a sell trade. Basically, for this particular trade, we have a range. Okay, price is ranging. The range has not extended to my sell limit, which is at 948,000, and it is also rejected away from it has not extended to my buy limit, which is 948,000. It is also not getting to my sell limit, which is 958,000. Now price is going down towards the midpoint, so around here I can easily place a sell trade if I'm convinced price will go down. So if I place a sell trade, now I will have a running trade. Okay, what I will do is to hedge that running sell trade, which is to place a buy stop order, expecting that price will continue to sell. But if price turns away from the running sell trade, it triggers, there's possibility that it will trigger my buy stop order, and that buy stop order is going to be 3 times the lot size of my running sell order. Okay, of course, the whatever take profit I might have set for the sell trade will be changed to 2,500 points, knowing fully well that the take profit of my buy stop order, okay, is 2,500 500 points. For now, what we are seeing is a pure rejection. Okay, and price is definitely going to slide more. At this particular point, I can easily place my sell trade. Instant execution. If I'm convinced that price is going to go down, I place my sell trade, which is what I'm trying to do. I change the lot size to 0.001 and I hit the sell button. At this point, I'm looking at the price, the axe, and the looking at the axe line and the bid line. On the axe line and the bid line, I saw that price has tested that my midpoint and has gone up. So I hesitated from clicking the sell button. So I'll continue to monitor on the main chart to be sure that price is actually going down or not going to give me a fake out, which is a fake breakout to the downside. So here I placed the other sell order. Now I have a running sell trade. Okay, so the next thing I'll do is to place a buy stop order to protect my running sell trade. What I'm doing here is to set take profit for my sell trade. Now the take profit I set, okay, should not exceed the buy limit below. Should not exceed the buy limit below. It should be around 2,500 points. Okay. Should not exceed the buy limit below. The take profit is around 2,000 points. Okay, which is safe. Okay. Then I'm expected to place a buy stop order if I sense that price is going away from my running sell trade. But for now, the running sell trade is doing fine. I already have, okay, it's doing fine. Doing fine. You can see it's doing fine. Almost getting to the 2,000 points. Almost getting towards the 2,000 points that I set as my take. Is already getting to like around 800